Welcome back. Advanced Management Accounting. This is a paper you have to learn in your first semester PG class. And you might have heard the term management accounting in your degree classes. And in this paper, you will be studying in detail and in advance some of the methods and techniques which you have learned in management accounting in your BCom classes. So, in advanced management accounting, you will, as the name suggests, you will be learning in advance some of the methods you have studied in detail. And actually, this is a theory come problem paper. Even though there's a certain percentage partition between theory and problem, you have to learn in detail theoretical part as well as the problem area. So let us continue with the new area, advanced management accounting. Module 1, Introduction to Accounting for Management. And you might have thought that management accounting and accounting for management there is any difference between the terms. Actually, these terms can be used synonymously. The concept and the principle regarding the accounting for management or management accounting remains the same. And you have learned about the accounting for management or management accounting, and let us discuss about the further aspects under this same area. Introduction. I hope you all guys know what is meant by management accounting, so you might not be needing any detailed information or a detailed introduction about the management accounting. Still, let us brush up our known ideas. We all know the main branches of accounting are financial accounting, cost accounting, and management accounting. And before we come to the third one, management accounting, let us discuss the concept of financial accounting and cost accounting. We all know that what is the concept of financial accounting, why the organization is preparing final accounts, and the need of financial accounting. We all know that part, and we are not going to explain that part again and again. Anyway, the concept is financial accounting helps the organization identifying the organization's performance. Performance in the sense means whether the organization is earning adequate profits or losses, and at the same time balance sheet helps in providing whether the organization is having a proper position with the available assets and liabilities. In simple terms, we can say that whether the organization is working perfectly and whether the position of the business is good or not. That is the concept of financial accounting. For that, under which we will be preparing final accounts. But in financial accounting, the thing is that it provides details regarding whether the organization is earning profit or loss, but it doesn't give a glimpse into the idea that how the organization earned that profit. What was the reason behind that earning that much profit? If it is running at a loss, and what is the reason for that loss? In every business, there is a reason for everything. So how the organization earned profit during the year? From which source? There will be a reason. The financial account doesn't provide that reason for the organization's present position. That was one of the issues regarding financial accounting. So the thing is that management, we all know what's meant by management. There is a top level management. Their main activity is taking decisions. We all know that area. And management accounting need more information, more data for decision making. The financial accounting can provide information only up to the whether the organization is earning profit or loss and whether the position is good or not. But management need more information. But financial accounting can't provide that much information. So there is an issue or limitation with the financial accounting. Whereas the next branch of accounting is cost accounting. Even though cost accounting is a wide area, it's of great use and it provides or helps the organization decision making with regards to cost. but it also doesn't provide necessary information for the management. In cost accounting, we are preparing cost sheet, cost statement, identifying the cost of the goods and everything, but it doesn't say information like how the cost is earned or how the cost is occurred on that particular product. It may be due to purchase of raw materials. Why that raw materials has been subject to that much cost? How can we control it? How can we reduce it? Which part of cost can has to be controlled? Such information is not provided in cost accounting. Cost accounting identifies cost, but it doesn't provide any information regarding this type of cost has to be controlled in the business, or that type of cost has to be taken into consideration. Such information are not provided in cost accounting. So at the beginning I mentioned that there are three branches. First is financial accounting, second is cost accounting, and we have mentioning about the financial accounting, cost accounting issues. The limitations of financial accounting and cost accounting led to the development of a new branch that is known as management accounting. As we all know, management has to take a number of decisions. To take decisions, management need accounting information. Unfortunately, financial accounting fails to give required information to management. Cost accounting also fails to provide relevant information to management. So, the limitations of both financial accounting and cost accounting have led to the development of a new branch of accounting, which is known as management accounting. James H. Bliss was the originator of the management accounting concept. So that's how the third branch of accounting developed. The limitations of the first two led to the development of management accounting. Next one, let us discuss about the meaning and definition of management accounting. There are a number of meanings or definitions of management accounting. So before we go into that, we have to just go through the general concept regarding management accounting. We know that all organizations require accounting information. Accounting information helps organization to manage their daily operations. It also helps to plan future operations and to evaluate past performance. Both financial accounting and cost accounting provide accounting data. The management accounting transforms these accounting data into accounting information. That is the main role of management accounting, because accounting accounts or the accounting statements provide data, but that data are limited when compared to the requirement of the management. So such data are changed to such a manner that information which was generated from the statements help the organization or the top level for decision making. Management accounting provides information that is relevant to managers for decision making. The term management accounting consists of two words, management and accounting. We all know what is meant by management. It refers to the functions of planning, directing, controlling, etc. Whereas accounting refers to the recording, classifying, summarizing, analyzing, and presenting the financial transaction. Thus, the management accounting is a system of accounting which provide information to management for planning, directing, and controlling the business activities. So in general, we can say that it is a study of managerial aspects of accounting. It is a tool in the hands of management to exercise decision making. So in general, we can say management accounting transfers accounting data into accounting information, then provide information that is relevant to managers for decision making. Management accounting includes various processes of preparing management reports, accounts that provide accurate and timely financial and statistical information to managers to make short-term and long-term decisions. So in short, we can say management accounting refers to accounting for management. That's why in the beginning we have mentioned the term accounting for management as well as management accounting. So these are the general concepts regarding management accounting. I hope you guys are following the concept. Since we have learned the same area in the BCom, you might be finding simple. So let us go to the next area. Nature of management accounting. By nature, it means characteristics of management accounting. So let us discuss briefly what are the various characteristics of management accounting. First one, it provides accounting information. Yes, exactly. Management accounting is based on accounting information, and it involves presentation of information in such a way that those information will be helpful for the management in taking decisions. Next one, it studies cause and effect relationship. Management accounting analyzes the cause and effect relationship and the facts and figures shown in the financial statement. But financial accounting doesn't conduct such type of analysis. And if there is a loss, the reason for loss is investigated. And at the same time, if there is a profit, the factors affecting the profits are properly analyzed. And such analysis and details are passed on to the top level management so that the management can take appropriate decisions accordingly. Only with the help of management accounting, the top level can take proper decisions. Even though these informations are collected from financial statements are a raw representation. The top level may not be in a position to identify the exact information from the raw statements. It is a management accounting that helps the organization in understanding the proper information. Next one, quantitative and qualitative information. Management accounting deals with quantitative as well as qualitative information. Quantitative information in the sense means all those financial transactions that are represented in the financial statement. And what about qualitative? What kind of qualitative informations are dealt in management accounting? If you remember the topics you have learned in the 5th semester, you might have come across a term debtors velocity. Debtors velocity means number of times the debtor amount is collected from debtors. In that case, number of times amount has been collected. Actually, that is a qualitative information, not related to. It is not a financial representing data or a amount representing data. It is a times the debtors, the amount has been collected from debtors, and on the basis of that, we will decide that the organization's liquidity is good or bad. So such informations are qualitative in nature. And regarding creditors the velocity and the time taken, debtors turnover ratio, in that we will be learning the time taken for repayment as well as time taken for collection. Such data are basically related to qualitative informations. So management accounting deals with such and such qualitative as well as quantitative studies, but financial accounting and cost accounting doesn't deal with such type of informations. Since it deals with qualitative informations also, the management is very much relieved from identifying information relating to these two factors, because management accounting already provides such information. Management or top level doesn't have to go for finding qualitative information alone. Accounting for future. Management accounting provides information to management for planning the future operations. It collects details from a financial statement that represents the activities during a certain period, and on the basis of this, it will provide information to the top level so as to take decisions and plans for the future. So in general, we can say that management accounting is an accounting for future. Increases efficiency. Management accounting enables the management to select that best alternative which is more profitable. In this way, it increases the efficiency of the business, because management accounting provides such information that helps the management in taking appropriate decisions. When appropriate decisions are taken at the right time, it helps the organization in working efficiently and effectively, thereby increasing the performance. Ultimately, it helps in earning profit. Next one, decision making. As we have mentioned earlier, management accounting helps the top level management in decision making. So the main objective of management accounting is to provide necessary information to top management for taking various decisions. Use of special techniques and concepts. If you remember the paper which you have learned in 5th semester, you might remember various modules you have learned. Various modules you have learned is analysis of financial statement, in which you have learned common size statement, comparative statements. After that you have learned ratio analysis. After that you have learned marginal costing. After that you have learned cash flow statement, fund flow statement. These are the various tools or special techniques and concepts. You have learned only 3 or 4 main tools. There are number of methods and tools that are there in management accounting, and management accounting uses those special techniques and concepts to make accounting data more useful and helpful to the management. Important techniques are standard costing, we have learned that. Budgetary control, we will learn ratio analysis and responsibility accounting. Apart from this, there are now numerous methods and techniques in management accounting. You will be learning in detail in this semester as well as in your post PG topics. Multidisciplinary. We all know what is the meaning of multidisciplinary, because management accounting is a combination of several disciplines. Discipline means subjects such as financial accounting, cost accounting, statistics, operations research, economics, and many other subjects. These are the major subjects. From these subjects, the management accounting has borrowed various tools, techniques, principles so as to present the financial data in an appropriate way. It's management oriented. We all know what is the principle or concept regarding management accounting. Management accounting is an accounting for the use of management so as to helpful in taking decisions relating to the business. So we can say that management accounting is management oriented. And finally, art and science. Management accounting may be regarded partly as science and partly as an art. It is a science of quantifying and summarizing, an art of interpreting and according data. If you have gone through that same topic in your 5th semester, you might remember the problems that you will be given a statement and you may be asked to do some of the method, any of the method. It may be ratio analysis or a fund flow statement, cash flow statement, whatever it is. For example, let it be ratio analysis. After computation, you will be asked to make an interpretation on the basis of your analysis. So that is the part where the art and science come. Science means application of various tools and techniques. Art means the proper analysis and interpretation of your results. So management accounting is art as well as science. So these are the major characteristics of management accounting. Apart from this, there are numerous characteristics related to management accounting. Try to identify more and more points, because mere 10 points doesn't help you It just give a glimpse into the idea of the management accounting. Try to identify and add more points. We will discuss about the further cases in the next